Welcome back today. This is John Mazzara with Remax Results. Thanks for visiting the channel. Today I have a special guest. He's been here before and he's back with some wonderful information about renovation loans. It's Preston.Schmidt with Movement Mortgage. And so I'm going to let him take over. He's going to go ahead and share the screen and do a presentation, and you're going to learn everything you ever wanted to know about renovation loans. So Preston, take it from there, buddy.
Thank you so much. Hi guys, Preston.Schmidt with Movement Mortgage here. I'm excited to kind of explain to you an option for you. It's called the renovation loan. If you're having a difficulty finding a home out there, there's just so many homes out there that need a lot of work, and sellers are just not listing their properties fully refinanced or fully refinished. So this is something that a lot of people are taking advantage of because all this work that can be done can be financed into the loan. So what are the options I wanted to show you here? I'm going to make this a little bit bigger. Where is my screen?
If you go all the way up to the top, Preston, you hit that little, there you go. Perfect.
I got it. So Movement Mortgage is my company. A little bit about us. We're founded in 2008. Movement Mortgage exists to love and value people by leading a movement of change in our industry, corporate culture, and communities. And our innovative mortgage process is a game changer, serving real estate agents and home buyers with true excellence and efficiency. Movement employs more than 3,500 people and has more than 650 branches in the U.S., spanning 49 states. Our nonprofit organization, the Movement Foundation, has reinvested more than $40 million in communities to date. So about Movement Renovation Loans, you're going to learn about what is a renovation loan, how does it work, what do you need to know about renovation loans, and how can renovation loans help you sell more properties. So accomplish two needs with one loan. Renovation financing allows a borrower to purchase or refinance a home in less than ideal condition and make improvements immediately after closing. And renovation financing is based on low first lien mortgage rates, as opposed to a higher rate credit card or home equity financing. The cost of renovation is financed into a new mortgage, and the amount of financing available is based on the value of the home after the improvements are made as completed value. So who can benefit? Well, home buyers can purchase homes in less than ideal condition or as-is type properties and address the problems immediately after closing. Now, homeowners, they may upgrade, modernize, or expand their home to better serve their needs or to increase their home's value and not have to move. Now, real estate agents can sell properties in need of upgrades or properties that need repairs by helping potential homebuyers envision remodeling possibilities. Sell a vision of what the house could be. The buyer could create their dream home now through a renovation loan. Some of you won't show a property that says it in the listing it needs, the REOs or short sales, HUD properties as is, cash only. Responsibility of the buyer, handyman, special or needs, TLC. Many of these properties can be financed with a renovation loan and turn them into a very viable option. Investors can purchase homes in needs of repairs or upgrades with a low rate financing, freeing up capital for additional investment opportunities. And additionally, updated properties can typically fetch higher rents or improve the value of the event or resale. So here's kind of like a before and after picture of the same exact house, just night and day difference. And here's another one. It clearly needs a lot of work, but it just looks like a $1 million house right here.
I think Krista must have been over there.
Yeah, and my wife. Good designer. So comparable transactions. So you have a sales price of $300,000, vision of $24,000 to $29,500 total renovation costs. And you have a sales price of $400,000 with the $32,000 or $39,534 total renovation costs. And then a sales price of $500,000 vision, which is the repairs of $40,000 and the $49,750 total renovation cost. So it's basically just adding in the cost of the renovation loan. So if you want to make sure you stay under a certain threshold in some of these products, you have to always add in the total renovation costs into it on top of what the repairs are going to be. The vision we quote is what we can promise with no actual increase in the appraised value above the sales price. The actual renovation can be more as long as we receive an increase in value from the appraiser. Thus, by selling division within these values, you'll never lose a sale unless the property does not appraise for the contracted sales price. Here's another comparable transaction. The contract sales price of $200,000, total renovation costs, including the contractor's estimate and all other financing fees, such as contingency, reserve, inspection, title updates, and other fees, $55,000. So the total acquisition cost would be $255,000. With a loan amount at 95% loan to value, you're looking at $242,250. Steps to a movement renovation loan. Borrower contracts a renovation specialist, and then the product options are discussed and the pre-approval decision is made. Contract of sale is executed, the purchase, and using actual sales type of financing, price and then the required down payment, percentage off of the sales price, and then the renovation estimate completed by a contractor or a HUD consultant submits it to the lender. If it's FHA or government, it needs to have a HUD consultant to make sure that all the necessary repairs are going to be done if needed to pass this inspection. The appraisal is ordered with an estimate to maximize value after improved value. And then loan conditions are cleared and loan commitment is finalized. The loan closes and funds and associated repair funds are held in an escrow account until the renovation begins. The renovation funds are dispersed based on specific loan guidelines and draw schedule subject to satisfactory work inspections. Do you have anything to add to that yet so far, John? In the past, any renovations loans you've done?
No, you know what? I think we haven't had enough outlets, so they've been available, but to be honest, most of the lenders have shied away from them, even though they could do them. And that's what's nice about you coming on today is you're making this available and you're not running from it. So obviously it requires more work on your part. And
I like a challenge.
yeah, you're open arms on it, whereas other people are sometimes looking for the quick, easy. So I appreciate that. And no, I think this is a good product for the right person. And thank you for, for bringing it to us here.
Yeah, so the moving on here, the buyers are expected to value added service today, and that's exactly what renovation program is created for. Discussing renovation programs as an added value service. Using a renovation loan actually adds monetary value. Real estate agents can attract more potential buyers if they can market to fixer-uppers. Use the revision of the renovation to overcome buyers' cosmetic objections, and the REO and short sales are the perfect loan products for properties being sold as is. I just lost a deal just a week and a half ago. It was an as-is property, and it was just because of a electrical panel was banned
Hmm.
because it has history of starting fires,
Yeah, but it had
and the
the
seller
aluminum.
wouldn't do anything with it. It was as is, and they're like, they offered way above asking to win this house, and like, can you just work with us a little bit to cover the cost of us needing to do this? And they're like, no. So they got mad and then they walked. I'm like, we could have done a renovation loan, but okay.
Wow, bummer.
Yeah, it was frustrating. So the real estate agents are also paid when the loan closes, not after the home is renovated or repaired. So that's a difference too. So on the difference, we don't pay until the loan completely funds, and it doesn't fund until after the repairs are completed.
Are you subject to like the 6 month max or what is your timeline? Or I suppose it varies depending on the
It,
amount.
it varies. Yeah, it wouldn't go about that. We try to get the renovations done within 3 months on most of them. No later than that. They usually
And
can be done pretty quickly.
one thing that looked interesting on your example is that you were able to take 100% of the soft cost value.
Yeah.
So, like you'd mentioned title and other things in there and draw costs and whatnot. So if that was included, you didn't have to subtract that or anything like that. So that was nice.
Yeah, so the only thing you have to worry about is if the repairs you're going to do is going to bring the equivalent amount of value, then we're going to be fine.
Hmm.
So utilizing niche products increases an agent's referral base, and when it's time to relist, the property already is updated. So help agents sell or list properties that need some TLC. That's kind of something more on my end. And then the current listings upon proven methods by working with a renovation specialist.
Question, could they do these loans with you, the reno, instead of getting, let's say, a line of credit, because it's going to be over 80, 90%, it might be 110% or whatever. Are they able to do a refi into a reno loan and
Absolutely.
use this?
Yeah, the only ones that don't are like the VA, USDA, and one others, but the rest of them, like the Homestyle, conventional style renovation loans, you can certainly do a refinance, and you can go up to 95% loan to value.
95 of the new value.
Yeah, correct.
Yes. So this is really something where somebody's stuck. They need to take more money out than their line of credit will allow. And by taking out a new loan and a rental loan, they can get exactly what they want. That's fantastic.
Yeah, for people who are just love the area, they don't want to move, they have room to grow in terms of adding on to their house. They can add a bedroom and a bathroom, really adds the value of the house, adds the square footage. It just seems like a no-brainer. You have a growing family, everything is perfect except the size of the house. Look at this as an option.
Well, you know what? What is the size, the maximum?
I don't know off the top of my head. I'd have to look that up and get back to you.
Okay, no problem. Well, one of the things in Edina in April is they're approving ADUs, both
Yep.
attached and separate.
That's
So
rolled out pretty quickly, actually. Pretty
yes,
excited.
so this could be an applicable product for, I mean, for many, many, many cities, but for ADUs and for Edina. So I just thought I would mention any of my fellow Edina residents that you might want to check this out with Preston.
Yeah, and ADUs, if you don't know, are accessory dwelling units. So they're
Thank
like
you.
basically your mother-in-law apartments, right? Is that what you call them?
Yeah, yeah.
But yeah, homes can be knocked down and rebuilt using the existing foundation, which is kind of crazy to think. The homes can be raised and renovated to meet the new FEMA requirements. And homes can be made larger by increasing square footage, and modular homes can be used with the programs as well. An existing home can be moved to another lot.
Hmm.
Crazy. So here's some types. One of them that's not listed on here, which is just rolled out recently, is the USDA Rural Development Renovation Loan, 100% financing. But we have the FHA 203K standard full with consultant. And then we have the FHA 203 limited streamline. That one's where it's capped at 25,000. So if you have just some minor things you need to get done or repaired, in order to pass the FHA, that's going to be your option right there. A lot quicker, a lot easier to do. There is no limit then on the FHA 203K. And then the Homestyle renovation, that's going to be your conventional one. And then the VA renovation is, again, you got to be a veteran, but you can do a renovation loan using this option as well. So here's, oh, they increased it here. The limited actually would increase from 25 to 35, excuse me. But the standard covers many major repairs, such as structural repairs, moving or altering a load-bearing wall, or even knocking the house down to rebuild it as long as you have the existing foundation intact. The limited covers a max of 35,000 towards repairs. This loan type is intended for less intensive changes or updates, such as roof repair, replacement, or HVAC, flooring, or minor remodeling work. Okay. So borrower eligibility is one of the things that the renovation loan becomes, the 203K especially, becomes very important. The movement requires, 580 credit score on all FHA loans, regardless of the type. Mixed use properties are not allowed. So you can't have commercial and personal properties. Manufactured on-frame modular homes are not allowed. And then 203K self-help and contractors related to the borrowers are not allowed. So have to be a completely arm's length type contractor. And then credit scores below 620 must be approved by the loan committee. So ideally you want to be a 620 or higher credit score, but they always have to say that, 580 technically is the lowest score with other strong compensating factors. The Homestyle renovation loan, again, is the conventional loan. There are no required improvements or restrictions on the types of repairs allowed or the minimum dollar amount for the repairs. Repairs or improvements, however, must be permanently affixed to the real property and add value to the property. Renovation work must be done by a licensed contractor of the borrower's choice. Continuing on from the Homestyle renovation loan, the borrower eligibility, you have to make sure you're eligible. The Homestyle offers conforming and high balance options on purchase and refis up to 95% LTV with an optional borrower at FICO score above 660. You can go down to 620, but again, it's very difficult. Investment property purchases go up to 85% LTV with an optimal FICO score of a 680 and above. Common misconceptions. This is big. Renovation loans are hard to do and complicated. In reality, it all comes down to the people that are involved in the process. You got to work with somebody who knows what they're doing. I have a team that I work with that has an entire renovation department here at Movement. If I have a question, I know exactly who to go to and I get the answer done completely, completed right away. So renovation loans take way too long to close. Whenever they do not, the loans have more steps, but it's possible for them to close in 30 days or less.
Hmm.
So people don't understand how that's a very easy alternative. Any questions, John?
Well,
Or can
one
you think
question
of?
would be, it said to contractor, can you a la carte the contractors? Like, let's say I want a plumber here, an electrician there, and a HVAC guy over there, or do I have to hire one contractor to have him or her coordinate all three of those people?
It's one general contractor.
Okay,
If they want to contract out additional bids, as long as they're licensed, I'm assuming they're going to allow that. But as long as you have the one licensed general contractor, it's all on them. So if they're going
okay,
to hire someone to not know what they're doing in terms of repairs, that's going to be on that general contractor.
okay. And draw wise, is it one upfront or one after a certain amount of
Depends
work, or is it
depends on
very?
the
I know
type
it
of
varies.
product.
Yeah.
Yeah, it's the standard one can take multiple draws
Okay.
potentially if need be, depending on the work that needs to be completed, especially if it's a whole home rebuild. That's going to take longer. But
Sure.
for some of the smaller stuff, it's usually just a one-time disbursement of back to the contractor after it's all said and done.
Upon completion. Okay, so the contractor will have to carry it for a little bit or do a deferred bill or whatever they do.
Yeah, they sometimes have a small amount upfront and then the remaining balance at the end, or it's just all at the end.
Okay, beautiful. And then Preston, you want to show the grid real quick?
Yeah, sure. So this is just the grid, kind of basic, explaining the different types of products: Homestyle, Homestyle investment, Homestyle first-time home buyer, and then this is also known as the Homestyle Home Ready program, the VA reno, and then of course the USDA one that I was explaining. All the minimum FICO score requirements, ideally, and then we have the is there gift funds allowed? Yes, no, no, yes. So if you ever want this grid or want more information on this, just reach out to me. I am licensed in Minnesota and Wisconsin. If you happen to be in another state, let me know. I'll be gladly able to connect you with another one of my colleagues that are licensed in that state. I'd be happy to help.
That's awesome. And then Preston, one of the things that we didn't talk about was the Homestyle investment. So I believe that one could be used by an investor to go ahead and do a rehab on an investment property, correct?
Yeah, I briefly touched on it, but yeah, it's max at 85% LTV, but it is a way for the investor to hold on to more of their funds and utilize this option as well.
Okay, so this could be a great option instead of hard money where you're getting, very expensive rates.
Correct.
Could this be used, and it looks like it could, for either a purchase or a refinance?
Make it a little bigger for you.
So it looks like you have both options, correct?
Yeah, yep. Yeah,
Beautiful.
purchase or refinance, purchase or refinance, purchase or refinance. VA and USDA are purchase only. And then the Homestyle for first time buyer obviously is just a purchase only. At least one borrower must be her first time home buyer. They don't both need to be if you
Okay.
happen to have more than one.
Here's kind of a goofy question. You might not know the answer, but are these programs allowed to be used with some of the first-time buyer programs like the Minnesota Housing Finance or any of the other things that are out there today?
So they have a different program that they will do. Minnesota Housing specifically has their own like repair product that they could
Okay.
do after the fact. And I work with them as well, so I can definitely help with them. But if you need that down payment assistance, we'd have to go through them separately and then use their specialty program that they have available to their previous clients.
Okay, perfect.
But the other ones that you can use with this are like the Home Ready 3% down product.
Awesome. Awesome. Well, that's wonderful, Preston. That's a lot of great information. As long as you're here today, is there anything else you'd like to share with the audience? Share some of your mortgage wisdom. Otherwise, we'll go ahead and wrap it up.
No, I'm always willing to help. Appreciate any questions.
Okay.
Here if you need me.
I'm going to have your information down below, but why don't you tell everybody how they can reach you if they're just listening? Your phone number, your email.
Yeah, my phone number is 651-319-2000. And my email is listed below my Preston.Schmidt at movement.com.
Beautiful. Okay, Preston, thank you for sharing wonderful information. Reno Loans, Preston's your man.
Thank
Thanks,
you.
Preston.